In 1963, Pacific Milk Industries Malaysia Berhad, or now is known as Dutch Lady Malaysia, was set up. Producing sweetened condensed milk in their present factory in Petaling Jaya, Dutch Lady Milk Industries Berhad first established as a manufacturer of sweetened condensed milk in the 1960s in their factory in Petaling Jaya. Dutch Lady products, which include Dutch Lady Pure Formula Steam Milk, freezable and formulated milk powder for children, which is Dutch Lady Nutripan with 5 times DHA, are distributed to the Peninsula and East Malaysia. In 2000, the company named brand Dutch Lady with a new commitment, goodness for life, to gain knowledge and to gain experience. Owned by the Dutch parent company Royal Friesland Campina, they are constantly looking to innovate to further strengthen their position as the leading dairy company. Dutch Lady Malaysia products are certified halal by the Halal Hub Division of the Department of Islamic Development Malaysia JAKIM and the relevant recognized foreign halal certification bodies and authorities.
Liquidity ratio is a firm's ability to meet their short-term obligation. The current ratio of Dutch Lady Company in 2016 is the highest with 1.20 times among the 5 years. Besides, in 2017 to 2018, it shows some drops from 1.02 times to 0.95 times. It shows that the company has lower ability to pay for their short-term debts. We can conclude that the liquidity position of the company is unfavorable, as they should generate some ideas to pay for their short-term debt to the creditors by increasing their liquidity of current assets. The quick ratio of the Dutch Lady Milk Company is lower than 1 and it keeps decreasing year by year. Based on the graph, in 2016 is the highest with 0.66 times. Then the next year it drops to 0.61 times to 0.51 times in 2018. Next, in 2019 it shows some enhancement to 0.61 times again. Lastly, in 2020 it drops drastically to 0.42 times and it is the lowest. We can conclude that the company has low ability to pay for their short-term obligation and they are relying on the inventory compared to 2019. In the meanwhile, the net working capital is important to measure the company's ability to pay off for their short-term expense or debt. Based on the graph in 2016 shows the highest net working capital with 70 million. Then in 2017, it drops to 5 million. Suddenly in 2018, it dropped drastically to negative 13 million. In 2019, it kept increasing from negative to positive with 22 million. Next, in the last 2020, it drops again to negative. It shows that the company has higher liabilities. However, there are several exceptions for this rule. Just in case the negative is not always a bad thing.
Next, I will present leverage ratio. One of the leverage ratio is debt ratio. The debt ratio of Dutch Lady Milk Company in 2016 is 68.23% and it kept increase in 2017 and 2018. The ratios are 73.48% and 73.95% respectively. In 2019, the ratio dropped to 67.44% and remained decreased to 66.61% in 2020. The ratios show the company's ability to cover its debt through its total assets. The higher ratio is in 2018 and the lower is in 2020. This shows that Dutch Lady Milk Company has the higher amount of debt to finance asset in 2018. The second ratio in leverage ratio is debt equity ratio. Debt equity ratio 2016 is 4.20% and increased in 2017 to 6.35%. The ratio start drop from 2018 to 2020. In 2018, the ratio is 6.20% and decreased drastically in 2019 to 4.94%. In 2020, the ratio still falls a little bit to 4.85%. The higher debt equity ratio of Dutch Lady Milk Company is in 2017 and the lower is in 2016. This shows that the ratio in 2017 implies that the company is borrowing money for a greater portion of its funding, putting the company at risk bankruptcy. The last ratio of leverage ratios is time interest earned. The time interest earned of Dutch Lady Milk Company in 2016 2017 is 63.01 times. This is the higher ratio in these 5 years. This ratio decreased to 52.56 times in 2017. Then the time interest and dropped a little bit to 50.67 times in 2018. In 2019, the ratio decreased drastically to 38.10 times and still dropped in 2020 to 31.52 times. The ratio in 2020 is the lower ratio. It shows that the higher ability of Dutch Lady Maid Company to pay its interest charges is in 2016. It shows the Dutch Lady Maid Company can afford to pay its interest payment when they come due. That's all from me. One of the activity ratios is inventory turnover. The Dutch Lady Maid's inventory turnover in 2016 is 5.34 times and it increased in 2017, which is the ratio 5.73 times. This shows that the ability of Dutch Lady Maid Company to sell its inventory in 2017 is the highest. In 2018, the ratio dropped drastically to 4.83 times and it increased again to 4.90 times in 2019 and 4.92 in 2020. With the higher ratio, it tells that Dutch Lady Maid Company can move its inventory with relative ease. The second ratio in activity ratio is total asset turnover. Total asset turnover in 2016 is 2.01 times and it increased to 2.71 times in 2017. 2017 is the highest for total asset turnover in these 5 years. This ratio started drop in 2018 to 2.59 times, in 2019 to 2.40 times, and in 2020 to 2.21 times. Dutch Lady Maid Company has the higher ability to generate more revenue per ringgit of asset investment in 2017. The third ratio is average collection period. The average collection period for Dutch Lady Maid Company in 2016 is 32 days and it increased to 37 days in 2017. The ratio in 2018 is 39 days, which is increased a little bit, and in 2019, the average collection period remains 39 days. In 2020, the ratio dropped a little bit to 27 days. For the ratio, a low average collection period indicates the organization collects payment faster, so the greatest average collection period is in 2020. This company's typical collection duration was lower than 60 days. This shows the effectiveness of receivables management practice of Dutch Lady Maid Company, slightly effective in all 5 years because all of the ratio under 60 days. The last ratio for activity ratios is average payment period. Average payment period is to measure the average number of days it takes a business to pay its vendors for purchases made on credit. Average payment period of Dutch Lady Maid Company in 2016 is 200. The ratio reduced to 147 days in 2017 and increased again in 2018 to 152 days. Then the ratio dropped again in 2019 to 145 days, and in 2020 the ratio is 144 days. The highest average payment period of Dutch Lady Maid Company is in 2016 and the lowest is in 2020. This shows that Dutch Lady Maid Company takes long period to pay back their creditors and shows how efficiency Dutch Lady Maid Company is paying back.
Profitability ratios are financial metrics used by analysts and investors to measure and evaluate the ability of a company to generate income relative to revenue, balance sheet assets, operating costs, and shareholders' equity during a specific time. The gross profit margin of Dutch Lady Maid in 2016 are 42.37% and it decreased in 2017 to 37.68%. In 2018, the ratio is 39.70% and it decreased in 2019 to 37.64% and in 2020 to 32.44%. In 2016, the margins are the highest. It shows that Dutch Lady Maid Company reflects a higher efficiency of core operation, meaning it can still cover operating expense, fixed costs, dividends, and depreciation while also providing net earning to the business. Net profit margin. The formula of net profit margin are net profit after tax divided by net sales. The net profit margin of Dutch Lady Maid Company in 2016 is 14.23% and it decreased to 11.06% in 2017. In 2018, the ratio is 12.35% and it decreased in 2019 to 9.65% and in 2020 to 6.67%. In 2016, the net profit margin of Dutch Lady Maid Company is the highest. So with the highest ratio, it indicates better income shareholders. Operating profit margin. The formula of operating profit margin are EBIT divided by net sales. The operating profit margin in 2016 is 18.76% and decreased in 2017 to 14.79%. In 2018, the ratio is 16.58% and it decreased in 2019 to 13.20% and in 2020 to 9.09%. In 2020, the operating profit margin is lowest, so it indicates the lower productivity provided by the firm. In 2016, the operating profit margin is highest. It shows that ready-made companies are more well-equipped to pay for fixed costs and interest on obligations have better change return on total assets. The formula of return on total assets are net profit after tax divided by total assets. Return on total assets of Dutch ready-made company in 2016 is 28.62% and it decreased in 2017 to 30.01% and in 2018 to 31.98%. The ratio decreased in 2019 to 23.21% and in 2020 to 14.71%. In 2018, the return on total assets are the highest, which shows that in 2018, the company have higher return on firm investment. Return on equity. The formula of return on equity are net profit after tax divided by shareholder equity. Return on equity of the ready-made company in 2016 is 90.08% and it decreased in 2017 to 113.18% and in 2018 to 122.74%. The ratio decreased in 2019 to 71.64% and in 2020 to 44.04%. The return on equity in 2018 is the highest. It indicates that in 2018, this company gives higher return to their shareholders compared to other years. A conclusion, the financial ratio analysis is important in decision making. Usually, the external stakeholders really use this financial statement to identify the health of organization and evaluate their financial performance, while the internal constituents use it to monitor and managing the finance. Overall, Dutch ready-made company has performed well in operations and financial in a business. Having fluctuation is a normal thing for business operation as some factors are uncontrollable such as economic change, inflation, natural disaster and more. However, the company should improve and take precautions steps to that they able to get profit and sustain for upcoming